Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today it is Tuesday, May 5th. And we have a video about whether the US and Donald Trump will or should just tell China to go stick it on the over $1 trillion of debt that it appears China still holds. We'll also be digging into the gold and silver news as well. So if you're a gold and silver investor, I promise you this one's going to be fun because not necessarily because of any brilliant insight I will add. I'll try. But I mean, some of these stories just write themselves. So let's kick it off with the first one here. Yesterday, you may have seen an article on Reuters breaking views. America could actually shirk its debts to China. And now, obviously, when you see this being passed around Twitter and you see that headline, and then there's the picture of Trump, got a lot of attention. Was interesting as I actually read the darn thing. I noticed it was written by John Foley. There's not actually a quote of Trump in there or anything indicating that Trump or the White House is thinking of doing that. So factor that in. Although I don't think these stories end up in Reuters by accident. Interestingly, I'm reading a book that goes behind who owns, some of the news agencies and how all these and the government agencies are connected. So I don't think it's a complete just John was thinking of this in his cube one day. But is interesting down at the bottom. In fact, before we even get in here, this is what I noticed also. Reuters breaking views is the world's leading source of agenda setting financial insight. Thought that was just interesting choice of language there. But let's dig in here because what he writes, basically he thinks that with all the economic damage China wrought by covering up COVID's 19 spread, why should Uncle Sam pay back the 1.1 trillion it owes the People's Republic? Seems like he's assumed China's the bad guy here. I don't really know who did what in the Corona thing, but anyway, gets into, the bluntest way would be to avoid government borrowings from China is to default, but the Treasury can't see who holds each individual security. So here we go. Still, where there's a will, there's a way. While America can't just refuse to pay its debts, it could instead create what amounts to synthetic default that hits selected debt holders only. Trump could simply demand that the banks halt any payments of interest or principal to any account held by a Chinese government counterparty. Alternatively, he could freeze the assets. He could even demand they be seized. Think of it like sanctions with China as the target. Trump could argue it's not a default since other holders of the debt would be paid. And then he continues to mention, these are the astonishingly broad powers granted by the International Emergency Economic Powers Act. In just under 1,000 words, the 1977 authority grants the commander-in-chief the ability to bring Santa Claus back, run the world, and do almost anything with property that touches a country representing an unusual and extraordinary threat. That's pretty dangerous in my opinion that something like that can be popped in there 200 years after the country was founded, and in under 1,000 words say the president can do basically anything anywhere in the globe if he says that it's their fault. Hopefully those powers are used responsibly. Again, I'm not trying to bash Trump, and by all means, I hope this narrative that he's going out, busting up the deep state, arresting elites, recovering elite wealth, and doing something about some of the unfortunate activity that we're hearing more and more about on these email servers and WikiLeaks about just disturbing activity. So I hope that's happening. But again, it's like when you have, at least we take it on face value. Again, Trump was saying that the stock market was a big fat bubble. Now he says the higher stock market is great. Makes it a little challenging to know that those powers are being bestowed in good hands. especially given the track record. Maybe in a future episode, I'll show you some of my new books I got on the Bush crime family syndicate, and reading about their involvement with the Nazis. So, I mean, yes, these concepts sound good, but like anything, if the person holding the power cannot be trusted, um, you know, and in either case, why I don't think, I don't know. I mean, it certainly well could be planned that a default is coming. Um, whether it's planned or not, I can guarantee you a default is coming, whether it's explicit, which means they, restructure, or if it's implicit, which means they just print the money and kind of a sneaky form, a sneaky way of going about it, which is, of course, at least so far, what the Federal Reserve is doing. And I'll put an ounce of silver on it that it is what most likely, I mean, maybe we'll have a combination of the two, but here you see Fed expands business lending program. Eligibility and loan terms have been loosened on the $600 billion effort there. I mean, these numbers are just staggering. You just see one story after another. Again, I get my Wall Street Journal alerts, and read the headlines, and fortunately have a couple other good sources. But I mean, even if you go and look at the Fed's balance sheet, are they really telling us everything they're doing? I would guess not. And perhaps what's really unfortunate is that even if you are going to go print up this money and dish it out there, I know there are a lot of people that really could actually use some assistance now. And everything I've seen so far is that the majority of all this money is just being directly stolen by banks and governments, which is unfortunate. And perhaps maybe I'm turning a new leaf today. No more holding back. I'll be respectful in the way that I say things, but as I see and think about it more, this sure does remind me of, it's like Goodfellas mixed with the Truman Show. It's some bizarre staged theatrical event, but yet the people running it, rather than these trusted leaders, I think we've been indoctrinated to believe, certainly I was growing up, and as you hear more and see more evidence, again, I try to keep things to the financials here. And maybe it's just I've been affected by seeing some of these things that are coming out about pedophilia activity and a lot of just disturbing things, which, hopefully this is all coming to an end. Certainly the financials seem to be coming to a head, and we'll leave it at that. But again, you see money being printed, and this does seem to be a broad day bank robbery, in my opinion, for what that's worth. Here you see U.S. Treasury expects to borrow $4.5 trillion in fiscal year as stimulus spending soars. I mean, it was interesting. I did an interview with Trevor Hall of the Mining Stock Daily podcast yesterday, and he was asking me a question about something about 750 billion that the Treasury was going to do. I looked at my headline. It was already 2.99 trillion by then. Now it's jumped up to 4.5 trillion. I mean, these numbers are just staggering, and they act as if it's just a drop in the bucket, and the Fed is monetizing everything, which is the reason why I have a channel and sit here and talk about gold and silver. I don't get into cryptos as much, but I think you have the same effect there, that there's going to be some point where the dam bursts, and anything that has any sort of tangible value, and whether you like cryptos or not, I mean, just to the degree that the crypto people place a value on it, and I do think in some mix there will be cryptos and metals combined, maybe other things. Maybe we'll have a lot more barter. Certainly if you own a farm, I think that'll serve you well. And we see next story here. California is first state to borrow from federal government to make unemployment payments. So again, I hope the money is actually going to people in need there in California, because and here's the thing where Trump talks about the strong economy, and in a strong economy, that's when you have money saved, and a strong balance sheet. You have things saved so that when you do have an unfortunate situation, whether man-made or not in this case, that you don't have to resort to just running the printing press wildly. Um, but you see that, I mean, it's just coming from everywhere. I wonder how much longer these markets will stay priced like that. Of course, not to be outdone, though, the Europeans, they don't want to be left out of the money printing bonanza. So the ECB offers cheap loans to banks to stem the economic downturn. Um, Consider expanding 750 billion bond buying program, amplifying its firepower to contain the economic fallout from the coronavirus pandemic. One of my favorite things from my Austrian economics education, I remember listening to Peter Schiff, and he would always giggle at how these guys are like, well, we're going to put in 62.3 billion so we get it this precise, like as if they're tweaking the engine of a car. I don't think it works that way. And a simple check and balance here is that if quantitative easing is good, why just do a little bit? I mean, why not fire out $1 trillion every day? I mean, if it's good, theoretically, more is better. Of course, if you're sitting there thinking, well, a lot of money's lost and they're just running a printing press, that doesn't seem logical. That's because it's not. But as I was reading what the Europeans were up to, I wanted to check in on my old friend Shinzo Abe, who I remember back in 2012 when he campaigned to be prime minister of Japan on a hyperinflation platform. He promised hyperinflation, and in this case, he did deliver. Some interesting comments here, because this is an article of dealing with pandemic debt will mean breaking some taboos. We're going to see defeating the coronavirus could result in public debt approaching that of the two world wars and certainly comparable to the financial crisis. Um, so the idea that the debt is now going to start accelerating. We're reaching the point where it's almost hard to take any of these numbers seriously, because this is past anything logical, or even in terms of past hyperinflations that I've read of. And I wonder again if that dam will just burst forcefully at some point. But here we have Prime Minister Shinzo Abe sought to break out of the cycle by using highly expansionary fiscal and monetary policy, now referred to as Abenomics. I'm going to start using that word in regular conversations on a more often basis. See if I can mix it in at dinner time tonight. Could be called upon in Western countries as other means of escape prove elusive. So when you can't tax people anymore, and then you can't borrow anymore because nobody wants to lend to someone that has no intention of repaying it, what else can we do? So post-war debt rising to 250% of GDP for the UK following World War II ceased to be an issue because strong economic growth brought down the debt to GDP ratio. I'd like one of these Wall Street economists. You're invited on the show. If someone can explain to me how the US is going to outgrow its debt, or any of these countries. Japan's high debt to GDP ratio, 234%, is sustainable in part because the borrowings are financed primarily by patriotic domestic savers. Yes! Thank goodness. We'll get back to that one in a second. But public debt in the West is now largely financed by market borrowing and depends on the kindness of strangers. So maybe if we could return back to our first story, and I still have that one up here again. Keep in mind that what this guy is advocating Trump do, now you don't have evidence of Trump saying this, although I'll bet he would like to do this. So here's what's supposedly the world's reserve currency safe haven. And they're talking about, well, should we default on someone? Should we use sanctions to default on someone? I mean, these are the kind of credits that you're getting. Shinzo Abe, doesn't hide his Keynesian love of hyperinflation. And I mean, what kind of stranger, unless you're lying to them, which is what a lot of Wall Street does, and comes up with terms like quantitative easing and CLOs, and as was so eloquently pointed out in The Big Short, you make people feel like they're stupid if they don't get it. But I mean, this is perhaps what I can help do is explain some of this. I mean, they're printing money. It's there's no kindness of strangers. I mean, unless why don't they say, hey, our government's really in bad shape. Can you give us $100? We're going to give you back 50. I mean, at least be honest about it, and then see if the kindness of strangers fund it. I don't think people are. I don't know anyone who's buying U.S. Treasuries to be patriotic. I can't remember hearing about that back in the day, but if you know anyone who's actually buying 0.6% yielding 10-year Treasuries, that with any, even the Fed's, well, geez, if the Fed's CPI is even 2%, I mean, now can we at least confirm that that's even government numbers confirmed negative real return? And just to put this in perspective, the 234% here, look at Argentina, who just has been going through a currency crisis. I remember writing an article for Miles Franklin back in 2017 when they were around 60%, and that was blowing out their currency. And here, Japan is at 234%, counting on the kindness of strangers. While the U.S., let's see, what are they around? I wonder what the U.S. debt clock is up to. Let's take a look at that. That one's got to be growing. I'll say 24. I haven't looked in a while. Oh, wow, about to hit 25. Good thing I checked today. Wow, that's stunning. I mean, it wasn't too long ago that 22, 23. Let's see what they have. Paper to silver ratio right now. I wonder how they define that. Paper to silver ratio. There's some cool stuff in here if you ever look. They have a silver price in there somewhat. Oh, they've added some new fields here in the U.S. debt clock. Let's see, where is our silver price? Oh, dollar to silver, $2,546 per ounce. Well, I'll dig into, let's see if we can click on that. I know there's a way to see, sometimes it pops up how they define some of these ratios, but wow, so they're marking silver at $2,546 per ounce. Where's the gold price? Gold price, dollar to gold ratio. Okay, well, I think this is as simple as they're making it sound, and I'm trying to overcomplicate. Dollar to gold ratio now. So I'm sure they have some measure of the dollar supply here, but basically saying that for every ounce of gold, there's $21,105. And that for every ounce of silver, there's 2,546. I believe I'm reading that correctly. Someone write in and let me know if I'm not, the exacts. I mean, I think you get the concept. And it's not all unconnected, although let's do a quick check of the price today. Wow, actually, you see, I've been dallying here on my video because silver or gold has jumped about 15 bucks since I started. It was below 1,700. You see, it's been quite a choppy day. That's a lot of volatility. That certainly, if there was a bank that, I don't know, was manipulating the market, and perhaps the Department of Justice had already used the RICO statute to charge them with, you might think, gee, you see a lot of volatility, and could somebody be front running this? Maybe like as Andrew McGuire pointed out to the CFTC in his email to Elliot Ramirez in 2009, I believe it was, maybe 2010. Although if you go and click that link below to get the Big Silver Short, my new book, which is now out in audio form, and also the print version almost there is an interview with Andrew where he talks about all of that stuff. That was actually one of the wilder chapters of the book. I'm not going to count on the Department of Justice Although I have talked with Dawn Gill, the CNBC reporter. Maybe I'll check back in with her. All right, I'm going to write a note. Check in with Dawn and see if she has any updates. You can see silver has had quite a volatile day. And why I referenced that Andrew Maguire email, because what he did was he wrote a letter to the CFTC and said, all right, there's a labor report coming out this Friday. If the number is strong, this is how the price is going to go. If it's weak, this is how it's going to go. And he described how it was going to get nudged upwards first and then come down. So certainly if you can manipulate the price or spoof it, and I mean, I guess we're not saying can anymore because several former JP Morgan traders have pleaded guilty to that. Well, I might add, also noting it was widespread practice at the firm and condoned by their supervisors. So I don't know that that's exactly what happened in this situation today. Maybe there were just a couple of big orders, but gee, when you see it over and over again for years, it makes you wonder. And maybe one day we'll find out what the Department of Justice is up to. Few more here to update you on before we wrap up for today. Here is the weekly transparent gold holdings. You've seen this last couple weeks. I'll keep sharing these each week. Hopefully they're helpful. This shows what's gone into the ETFs for gold, primarily GLD. There's a couple of other ones. So in the last month, you saw some big inflows, especially that bad boy. Still metal going in, and it's not nothing because if you can see about 2 years back here, and you see that some months metal went out. So even like that, it's come down. That still looks like a fair amount to me. Although in silver, a little bit of a different story as some metal, looks like 1.879 million ounces were removed from the trust. So we'll keep an eye on that going forward. This week, this story was from last week and says next week. So it's actually this week. You have Judy Shelton is going before the Senate Banking Committee. Wow, maybe we could live stream for that one. That could be fun. I'll, let me look up when that is. That could be a hoot watching Congress. We could, maybe on YouTube Live, we could all sit there and giggle at some of the Keynesian whoppers that are passed off. Especially, although I won't even make you wait until then, because there are a handful of gems in this article. Here, a return to the gold standard would play havoc with the Federal Reserve's balance sheet, which has swelled to more than $6 trillion because of the coronavirus crisis. I'm sorry, I'm not laughing at anyone affected by coronavirus crisis. Is just rather than cry at the insanity of this, I mean, sometimes it's just so absurd you have to chuckle. Shelton has since backed off her advocacy for returning to the gold standard, saying, I would not advocate for going back to a prior historical monetary arrangement, and saying Congress has the ultimate authority to regulate the value of the US money. Wow, I'd sure like to hear the context that one was placed in, because it reminds me of Steve Mnuchin saying gold is safe. He didn't say the gold is there, the US gold is safely in Fort Knox is accounted for. And as perhaps students of neurolinguistic programming will be familiar, and this is one of those statements that kind of, I would not advocate for going back to a prior historical monetary arrangement. Does that mean she doesn't want to go back to a printed dollar system like we have now? Or Kennedy said he wanted to read more of Shelton's writings before making a decision. It's just, it might be worth watching. I'll check what time this is going on. Does it say in here? Next Tuesday, so it's happening today. All right, I may miss this one, but we'll see. I'll keep you posted if there's an update. Here you see Venezuela asked Bank of England to sell its gold to the UN for coronavirus relief. Coronavirus relief. Again, wow, what a fascinating story. I don't claim to know the answer. You have Venezuela, and I'm guessing their government is no bunch of angels either, but somehow their gold is being held by Bank of England based on US sanctions, which, again, if the sanctions were used responsibly and appropriately, and it's like, hey, here's the clear evidence someone's, I still have mixed thoughts on policing the world, but maybe I'll just keep those to myself. But you see, continuing on, Venezuela and their gold. And just a few last things here, because we see India gold imports plummeted 99% due to Corona. So there's a lot of things that have happened. A lot of things have been due to Corona, and especially in the gold and silver supply chain. I'm fascinated to see if once stores start opening up and some sort of normalcy returns to life, what the order flow pattern is like. Fortunately, we have Andy Scheckman on, who keeps us posted. And but again, here you see, last story, Swiss gold refiners reopen as virus lockdown eases. So some things coming back to life. We'll see what happens with mine supply, bullion sales, demand for metal, but certainly is going to be fascinating. And as always, appreciate you watching the video today. I hope you found it helpful. And if you'd like to understand better any of these things that are going on or why they are happening, well, there's another video coming right your way now that explains all of that.